Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
What an interesting show today as we ask the question, how much do you have to make to file your taxes? That's today on the College Investor Audio Show. Welcome. So not everyone is actually required to file a tax return. It depends on your age, filing status, and amount and type of income. If you make very little income, chances are you won't need to file. But there are some circumstances outside of income that can require filing a tax return. Let's look at what's involved in understanding how much you need to make to file a return. If you're looking for an easy way to file your taxes, check out TurboTax, by the way. They're partnering with us to highlight how much you need to earn to file your taxes. If you don't know if you need to file a return, TurboTax can help. TheCollegeInvestor.com, we actually have some ways for you to get started on TurboTax for free. Know the standard deduction. So in general, you don't need to file a tax return if your income was less than the standard deduction. For 2020, the standard deduction was $12,400 for those filing single. The standard deduction reduces taxable income. So for someone making less than the standard deduction, their taxable income would be reduced to below $0. Obviously, that means there are no taxes due since there is no income to tax. The standard deduction does vary with filing status. We have a series of charts on this article at thecollegeinvestor.com. The standard deduction for the 2020's tax year, you can see all the different brackets. Over 65, increase in standard deduction for the 2020's tax year as well. And the legally blind increase in standard deduction for the 2020 tax year. All of those charts you can find neatly laid out at thecollegeinvestor.com. Income filing thresholds. To understand how tax brackets work with the standard deduction, let's say a 27-year-old single person makes $8,500 for the year. Does that mean they must pay a 10% tax on their income? No. The standard deduction must also be applied. The standard deduction for those under 65 is $12,400. Subtracting the standard deduction from this person's income results in no taxable income. Therefore, no taxes are owed. If, by the way, the same person made $12,401, they would be taxed on the $1. Imagine getting a bill from the IRS that you owe a dime. For married filing jointly, tax brackets are double what they are for a single person at the lowest levels. The standard deduction for this filing status is $24,800. For married couples under 65, they will need to make $24,801 before taxes kick in. If you don't know what your adjusted gross income is, again, TurboTax can help. Are you a dependent? So parents can claim their children as dependents until 19. If they are continuing their education, of course, parents can claim them until 24. If you are a single dependent under the age of 65 and not blind, your tax filing will depend on unearned income, earned income, and gross income. Unearned income, $2,200. Earned income, $12,400. And then gross income, if it was more than the larger of either $1,100 or your earned income up to $11,650 plus $350. That's confusing. Again, check out this article if you need to see it for yourself at thecollegeinvestor.com, just to help you remember. Even if you could be claimed as a dependent and don't need to file a return, you might still want to in order to claim a tax refund. Social Security benefits. For seniors with Social Security benefits, generally these benefits are not considered income and therefore not taxable. That's nice. The situation changes if you are married and file a joint return with a spouse who is also 65 or older. In that case, if you have a combined income of more than $27,400, you must file a return. If your spouse is less than 65, your combined income needs to be more than $26,100. So the amounts we just mentioned generally do increase a little bit each year. There are a couple of scenarios in which Social Security benefits must be included in your gross income. One of those is if you're married and you file separate returns and have lived with your spouse at any time during the year. 85% of your Social Security must be included in gross income. This might push you past an income threshold, requiring you to file a tax return. Another scenario arises when you have income in addition to your Social Security. If half of your Social Security benefits plus your other income, including tax-exempt interest, exceeds $25,000 or $32,000, married filing jointly, a portion of Social Security will be included in gross income. This is independent of your filing status. Again, TurboTax is fantastic at walking you through these types of things because it can get a little confusing. These situations may require a tax return. You also might be required to file for reasons like this. If you're self-employed and earn at least $400, including driving for rideshare companies, etc., received payment on a 1099 miscellaneous form, bought health insurance from a state or federal marketplace. Just like the tax code, trying to determine if you make enough income to file a tax return can get a little involved. If you are unsure, it's best to speak with a tax professional or use some DIY tax software to see if it makes sense to file. Why you might still want to file a tax return, even if you don't have to. Even if you don't need to do that, you might still want to in order to claim your tax refund. Let's just look at a quick example. If you worked a part-time job and earned $5,000, you may have paid money in taxes, and you could get it back by filing a tax return. Wonderful! But using a service like TurboTax actually could be free for you. They do offer a pretty robust free tier that would allow you to file your tax return and claim your refund. TurboTax, we have a link and as well as tons of different links and resources for you to look at thecollegeinvestor.com. Thanks again for stopping by today, and we will talk to you again very soon.